Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We're facing a new burst of inflation as commodity prices rise, oil and gold are both rising, and benchmark interest rates are stuck high, waiting to see where these tea leaves settle. Locally this week, we'll get June immigration data and inflation expectation updates. There'll also be the July PMI update and probably the July REINZ results as well. In Australia, look out for their NAB business sentiment update, but the key event will be the RBA's rate review on Tuesday, even if no change is expected or priced in. That is despite their CPI running at 3.8% and way above their target range of 2 to 3%, and showing little sign it will get back into range anytime soon. In the US, they'll release their July CPI data too, expect 3.4%, and their PPI, expect 5.5%, and another consumer sentiment update. In China, we are awaiting their new yuan debt data, which should come in late this week and be another quite weak result. Over the weekend, China released their CPI inflation data, revealing an annual inflation rate of just 0.5% in July, down from 1% in the previous month. Analysts had expected a 0.8% rate in July, so this was their lowest level since January. Food prices dropped 1.5% year on year, following a 1.6% decline in the previous month and marking the fourth straight month it fell. But beef prices rose 4.5% and lamb prices are up 6.2% from July from a year ago. Dairy product prices, though, were down 1.5%, however. Meanwhile, China's producer prices rose 3.5% in July from a year ago, slowing from a 4.1% rise in June, and that's their steepest rise in nearly 4 years. The retreating pace is due to weaker commodity prices, softer domestic demand, and continued pressure from overcapacity. There is also intense price competition in some industries. And China's exports surged almost 24% to $398 billion in July, in a better-than-expected result. The gains were driven by strong demand for AI-related technology products and a rush by manufacturers to ship goods to the US ahead of potential new tariffs. Outbound shipments to the US rose 17%, to the EU by 16%, and to ASEAN nations by 38%. And while China reported relatively stable foreign exchange reserves at the end of July, they also reported that their official gold holdings rose 640,000 ounces, or almost 20 tonnes in 1 month. That is the most in a 21-month streak of gold buying by them. Meanwhile, Typhoon Dolphin is heading for the China coast after clipping Okinawa due to strike south of Shanghai. It is a Category 3 storm and over 1 million people have been evacuated to safer ground. Taiwanese exports stayed very high, just over $75 billion US, just off record levels, but as time rolls on with these high or record levels, the year-on-year gains are fading. Still, they managed to report a 33% rise from a year ago, an unusually strong gain, and their trade surplus remained unusually large at $17 billion, up from $14 billion in July 2025. Across the Pacific of the US economy, and even with Trump loyalists controlling the data agency, US non-farm payrolls were reported contracting in July, down 23,000 at the headline level, when a modest 80,000 gain was expected. That is their worst July result in at least a decade, and it will get much worse if you look at actual data, because payroll shrank almost 1.1 million in July from June before seasonal adjustment. This is the real number of people who lost employment in the month. Their participation rate inched down, while their jobless rate was little changed at 4.1%. US inflation expectations for 1 year ahead edged down to 3.6% in July from 3.7% in June, which was as high since September 2023. The July level is a new baseline since the US attacked Iran. Prior to that, the survey recorded about 3% for the 2 prior years. Earnings in the same survey are seen to rise 2.8%, so that continues to record an underwater expectation for household finances. US consumer debt levels rose 3.3% in June, with revolving credit rising 6% on the same basis as both credit card debt and car loans rising sharply. Student loans recorded an unusual fall, though. The weakening labour market and both stubbornly high inflation and inflation expectations will complicate the discussions in Walsh's Fed meetings. Do they cut, hold or raise? There are probably votes for all three options. Markets currently price in a half a chance of a 25 basis point rise in September. And Trump is trying to screw the scrum again. There was quite the contrast in Canada, with them reporting their employment rose 75,000 in July from June. It'll have been a very long time since they had a gain that exceeded their southern neighbour. Their jobless rate fell to 6.4% and a two-year low, while their participation rate inched up. And bird flu is spreading in Australia, even if the number of reported cases is still quite minor. There is no way to properly track it, and by the time reports are received, infection is well established. The US Treasury 10-year yield is now just on 4.66%, up 2 basis points from Saturday, down 8 basis points for the week. And the price of gold has risen to $4,343 an ounce, up $6 from Saturday, up $293 or 7% from a week ago. Silver has held little change at just on $63.50 an ounce. That's up $5.50 for the week, or a 9.5% gain. And oil prices are unchanged from Saturday, still just on $78 a barrel in the US, while the international Brent price is just on $83.50 a barrel. The Kiwi dollar is unchanged from Saturday at just on 58.9 US cents, making it unchanged for the week. Against the Aussie, we're little changed at 83.4 Australian cents. Against the euro, we've held at 51 euro cents. That all means our trade-weighted index starts today at 62.6, which is up a bit less than 10 basis points from Saturday, essentially unchanged for the week. And the Bitcoin price starts today at $65,151 and up 0.6% from Saturday, up 3.3% from last week. Volatility of the past 24 hours has been very low, however, at just on plus or minus 0.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.